Good morning, guys. We are back at it after Independence Day, Canada Day weekend, and markets are looking green. Pretty happy about what we're looking at here. So, um, Europe's looking good, Asia's looking good. Things are looking pretty positive. Good morning, Hare. Things are looking really nice. I think a lot of it has to do with this right here. I made sure to save this article. I got really excited over the weekend when I saw this one. And most people from the headline would not love that, but I'm not sure how mixed signals from the administration is true because they've been consistently saying don't worry about it. But let's break this down. Hmm. Okay, so this is big right here. Next week, administration officials plan to promote a new study they say shows promising results on therapeutics. They wouldn't describe the study in any further detail. They said its disclosure would be market moving. This is a big deal. This is huge. I'm really hoping that's ACRX. ACRX. IPIX. Classic. It doesn't say what time of week they're planning on. Excuse me, showing us that. Whether he's going to make the announcement today or not, but SPY's up to 317. Holy cow, we're going for 320, boys. Okay, so let's see what else is happening out there. I'm sure there's going to be a lot of conjecture around which of these drugs is actually going to be the one. Right, we got some bankruptcy news here. We got some recalls. We got trade deal. Antibody news. This is done. This and this. This. All right, let's go through it. So the UK, which has been one of the bigger countries right, up until now, that has still been supportive of Huawei's technology being in their 5G networks, has decided to strip Huawei's gear from its 5G. That's huge. The states banned Huawei from using American components. Apparently, it's not American components that are made in China, but China components that are made in China. That fundamentally changed the situation. Okay, so the UK's out with Huawei. Cetadine. It's good news for them. What's up, Sabot? Uber board approves $2.65 billion deal. This one's kind of huge for Waiter. Uber board has approved a $2.65 billion acquisition of Postmates, combining two food delivery rivals. All stock deals to be announced as soon as tomorrow morning. Okay, so when this happens, what we're gonna have now is there will be Uber Eats, there will be DoorDash, there will be okay, so Grubhub was acquired overseas by a European company, so that'll still be there. So we've got Grubhub, DoorDash, Uber Eats, Postmates is gone. I haven't heard of these guys. Waiter didn't even make a list on this, which is interesting. There's a Waiter in this one. Less than 2%. I'd be very interested to see how much market share Waiter has picked up over the last couple quarters here. So Uber acquiring Postmates. So all of the red and the green are now one. So everything on the back end here of these Miami, you're almost exclusively using. Oh, there's Waiter. Okay, so how many people? What is this saying? Uh, yeah, you can ask it on Whisper, sure. Um, Grubhub, DoorDash, Uber Eats, Postmates, Waiter. Okay, so it's saying if they use these apps. Oh yeah. Privacy settings are what they are. I mean, just ask it. You could just ask the question. There's no silly questions. Um, so, okay, this is saying if you use Grubhub, did they use anything else as well? And so users of Grubhub, 13% of them also used Waiter. DoorDash, 31% also used Waiter. Uber Eats, 12%. Postmates, 5%. So it'll be 17%. Those who use Waiter didn't also use Grub. People that use Waiter just use Waiter. No problem. Wow, that's really interesting. So, what this is showing is, and this is part of the frustration that it seems like they're having with this, is all of these other guys here are saying, well, people are using multiple apps, and so we're losing, we don't have a dedicated user base. What we've got is people that are using us and then also using whoever else offers them a deal. But what's interesting here is a lot of these guys are are using Waiter as well. But Waiter users are not using the other guys, which is really good for Waiter. All right. So that's great news for Waiter. They should be doing just fine pre-market on that. Yep, they're already up. Okay, great. Luckin Coffee boots their own chairman and co-founder. Ooh. Might have something to do with this. No, this is Lucky Brand. This is a retailer that went bankrupt. I thought this was Luckin that went bankrupt. Oh, this is another retailer that's down. So this is one of the things with SPG guys that I mean, people keep talking about ETFs and these retail ETFs. Keep saying just don't go near it, don't. And this is why SPG is going to look to swoop in and buy up this stuff on bankruptcy. But it's like there's a reason why this company's going bankrupt. Its holdings aren't enough to save it. JCPenney, Pier One, J Crew. Hmm. Okay, that's a lot of vehicles. That's a lot of cars to recall. Wow, it's across multiple classes of car. Most were made in China. Hmm. So China's way behind on its trade deal purchases. This one's huge, and this one's huge. So they've only purchased 2 billion of energy when they agreed to 25. What is up, Dunhill? Good morning. As far as agricultural, 5 billion compared to 33, 19 compared to 84. I mean, numbers like this, guys, it does make you wonder, and I'm not gonna go conspiracy theory on this and say, okay, well, China engineered the virus and put it out there intentionally. However, China's deal here, this trade deal that looked like this massive omnibus deal where they would have to pay out into the U.S. Um, they're not. They're not, and the world's gonna let them get by on this because of COVID. Um, but I don't know that Trump's gonna let them get by on it. Well, you guys said here was the deal, you didn't follow through. Um, you're not negotiating in good faith, right? If you can't comply with what you signed to, that's on you. I can't see him being lenient on China with not picking up their end of the deal. Yeah, we just went over it. Yeah, I mean, there's several moves that they've made, but also they're so agricultural needs. That's always been a problem because it's not something that they really require, um, or that they can't get from somewhere else. Okay, hydroxychloroquine is finally off the table. Okay, so GSK Sanofi, $500 million deal with the British government for 60 million doses. So this is government starting to buy up these vaccines, guys. This is them just looking to buy up whatever vaccines they can get their hands on. After most of Gilead's doses were bought up by the American government, what looks like is going to happen is people are just going to swoop in and start buying up whatever seems to be working. So at least they have something to offer their citizens before the U.S. just buys up everything. Kanye running for president. Okay, so if this is simply a gag, this isn't the first time that Kanye has come out and said he's going to do this. So let's head over to where it's all happening and see if Kanye is actually going to run. I don't see anything else about the presidency other than that initial tweet. Does he elaborate here at all? I mean, this is a thing. That's almost 600,000 votes on that. That's quite the. So the general consensus seems to be that Kanye is only running to screw Biden. This guy's just copy pasting this into it. Yikes. Can we hear some of your policies? Not being Trump, not being Biden. Honestly, that's enough for me at this point. This one is always interesting, the delusion of grandeur. Um, I suspect it's on this. Next week, administration officials plan to promote a new study they say shows promising results on therapeutics. They wouldn't describe the study in any further detail because they said its disclosure would be market moving. I'm fairly certain that they're about to make a big announcement regarding a COVID treatment. My hope is that it's Berlacidin, given Berlacidin's study showing that it was 95 to 97% effective. That's huge. And this isn't the Innovation Pharma that's doing this. This is not IPIX that was doing that study. That was the RBL. So that this was a federal lab that did this test. And so when IPIX did the in viro cell study, it showed it was 75% effective against COVID, which is of note because remdesivir is only 57% effective, and that's what we're currently using. But then the federal biolab came in and said, okay, guys, we'll do this out of all of the drugs. There was like 1,000 drugs or some crazy number, and they boiled it down to 100, and then they boiled it down to 12, and then they boiled it down to 8. Of right now, in Operation Warp Speed, this is the only one that was in one of these RBLs that wasn't part of Operation Warp Speed. Um, a lot of people are saying that's just because it's such a small company, but you get results like this that are coming out where it's saying it's 95 to 97% effective. Um, That's pretty crazy. So not only is it effective, it's non-toxic to the cells, which means that you're not making people sick by giving them this. What you're doing is the really cool thing with this one, guys, and this is why I'm so hot on this, is it's a 3-in-1. Burleson seems to have the ability to not only be used as a treatment, so for those who have already contracted the virus, you can give it to them as a treatment and they'll recover. It can also be used as an antiviral for the infections that follow afterwards, so it will help build the immune system to fight against things like pneumonia or strep or community-acquired bacterial pneumonia, which is a big one. CABP is a big problem people are facing. This will help prevent that. Your immune system will be able to fight those off. So it's dealing with those that have already contracted it. It's also dealing with those other illnesses that seem to follow after people are coming out of this. It stops them from acquiring those. On top of that, it does have the potential to be used as a vaccine. Now, the company couldn't afford to do a test on all three, so it's running it on the treatment first. But with the possibility of this being used for treatment and vaccine and uh, post-illness secondary infections, this thing's going to be a powerhouse. I'm really hoping this is the announcement that Trump drops, because that thing's going to go to the moon. And I mean, who knows? Maybe it's that. Maybe it's that Kanye is running for president. Who's to say? This is great news for companies like MRA. MFA. MFA's up pre-market. Less homes in forbearance means these realtors, these real estate, these REITs are doing phenomenally. They're going to be doing much better than expected. We also got this news out of the US that the PPP bill will be extended. Now, this is not a check into people's houses. Yeah, so my spin on the Kanye tale is, if he is serious, and this is a serious thing moving forward, he is going to actually get his name on the ballot. I think that does affect the Democrat base of traditionally younger voters, as well as their black voters. I think there will be black voters that do vote Kanye. If they have to pick between a black president elect or Biden and Trump, they'll probably relate more to Kanye, crazy as he may be at times. This was a bit of an oddity last week, guys. The Soma holdings. We took a look at this. This is the first time. What's up, Fury? This is the first time in a long time that the Soma holdings actually declined. That's pretty crazy. Um, this number's just been going up and up and up. Now we're still over $6 trillion, but okay. So that's the stuff off Seeking Alpha. See if there's anything moving kind of crazy pre-market here. Neo's up 14%. OBSV. Yeah, Wader's sitting up at $3 right now. Do you ever buy pre-market? Have you ever? I have. I typically don't. Um, oh man, sorry. With most of my portfolio being in a long hold equity, I don't really need to rush a pre-market purchase. I'm not doing day trading. The only time that I've done it is on the short strategy that I'm running, um, with yeah, the new short strategy that I'm developing is there for sure. Um, there has been a couple that we entered pre-market. It wasn't any more successful than anything else, so um, yeah, not necessarily something that I do where I rush to a pre-market. Now, there are definitely reasons to do that. If you are seeing a big news fall on stock, then yeah, it's possible that a pre-market play could be necessary. But right now, okay, so this Broadway thing is going again. Radio One Class D. So this is another pump. LM Funding America. LMFA. Let's see. Okay, what is LMFA? What is this company and what does it do? Provides funding to nonprofit community associations primarily located in the state of Florida, as well as Washington, Colorado, and Illinois. The company offers funding to associations by purchasing their rights under delinquent accounts that are selected by the associations arising from unpaid association assessments. It's also involved in business purchasing delinquent accounts on various terms tailored to suit each association's financial needs, including under its new neighbor guarantee program. It also provides medical insurance products for international travelers. 9 employees. Oh, they're like a mob squad. This is okay. So the way this works, guys, is what they're doing is let's say that you own, this is talking about condo associations here. This isn't talking about nonprofits. This is talking about condos. This is talking about residential owners. Um, Syntax collapse, welcome, man. I will start to break down a whole bunch of stuff for beginners. Just let me finish the thought process on this, okay? So what this thing is doing is they're showing up at places like um, massive condo centers, whether they're high rises or sprawling bungalows, whatever. People that are in forbearance, people that aren't paying their rent, people aren't paying whatever. People are showing. They show up and they go, "Listen, I know it sucks to be a property owner with somebody who's doing this. What we want to do is buy those delinquent accounts from you. We'll give you cash up front. Here you go. Here's some money." You take this money for the debt that's owed, and now we own your debt. And then they go after the people that owe the debt to pay that back, which is, I mean, it's legal, but it's scummy, and guaranteed. And they're so sure that they can get the money back by going after these people. Um, yeah, they're so sure that they can get the money back that they're willing to pay people up front for those debts. So they pay the dues for all the delinquent accounts. Yeah, so they take, what they're doing is they're buying up the debt, and then they take, um, I just stream daily, but there is a YouTube channel there with past episodes that we've done breaking stuff down. I mean, it's not sketchy, it's legal, but it's scummy for sure. Because all they're gonna do is make the people that already can't pay their debts now pay their debts and the legal fees of this company. My issue with this financially would be, okay, let's head over to Edgar, but I'll tackle some of your guys' questions before we dive deeper into Edgar. For those of you that have never used Edgar before, this is where you go find all the SEC filings of any publicly traded company. So I'm going to read through their 10Q and see. So this is their last quarterly earnings report. We'll read through that in a second. In regards to what stocks you recommend people are just getting into the stock market. Okay, the first thing that you want to do before you get into the stock market is, no, that's the wrong one. YouTube. Let's go to Martini. Where is it? Okay, great beginner assets for you guys. These are huge tools. Oh, thanks, man. You found it before I did. But these are huge tools. The videos that she has up here are phenomenal. How to make profit in the stock market, Maslow's pyramid. Definitely watch these. Um, Beginner's Guide to Options Trading, if you're interested in options at all, that's there as well. But these three videos, if you watch these three videos alone, you are going to be set up for some pretty decent success to get started. Now, I know that's not a direct answer of which stocks do you recommend or not recommend. And the reality is, because that question in and of itself is extremely vague. And I know it's a question that a lot of people ask of, like, well, I want to get in the stock market, where should I put my money? Instead of, and this is something that I do on the stream all the time, is instead of me telling you what you should get into, I want to teach you how to identify the stocks that you should get into. So it's that old adage of, I don't want to give you a fish, I want to teach you how to fish. That way you don't need to come to me and ask. Instead, what you can do is you can you can learn how to go through the process that I go through on your own. That way you don't need me, right? I don't want anybody to ever need to show up here to figure out what the play of the day is. That's not what this is about. It's better for me to teach you guys how to find your own plays in your own sectors, and those resources are a great way to get started. Um, Top divvy stocks I recommend to investors for the long term. I like AT&T. MFA is one that I will be probably having in my long term portfolio. They had a 10% yield pre-COVID. Um, I believe that they will return to their yield following. Fractional shares in things like Apple and Tesla work well. Those aren't necessarily dividends, but the growth on those would be good. Shopify would be another one that I would look at to have fractional shares in. Um, Coke, yeah. Coke is a little bit more edgy than the rest, just because Coke has to evolve. So Coke is, if you believe like I do that the CEO of Coke is making some big plays and is getting ready to completely change how Coke works as a brand, then yeah, I agree, Coke. But there's a lot of people there that are skeptical about Coke's ability to evolve beyond a soft drink company. So we'll see. We'll see what they do. What about BAC or WFC? I would stay away from BAC. I don't like banks. As far as BFC goes, I just want to make sure I know what the ticker is. Um, yeah, no banking. I wouldn't. For me, I don't like financials. I I'm not a fan of anything under XLF. Any of the financials, I'm not a huge fan. Um, this one would be a good one. Waste management. This would be one that I look at seriously. Um, Long-standing companies like Avi. This one would be a good one. There's just consistent growth that you can expect from it. No, no Bank of America, no WFC. I don't like financials. I don't like the financial sector. When things blow up and when crap hits the fan, the banks are the ones that are left holding the bag of dog crap. I wouldn't want to be anywhere near the financials. All right, so I'm going to start breaking down LMFA's last quarterly report here, guys, and get a feel for how profitable this actually is. Um, so what I like about this is they get right down to it. Like, here's the financials. What we're seeing here is a quarter-to-quarter review. So March compared to December, which would have been their previous quarter. No, I'm not a huge fan of Boeing either until we know whether or not they're getting recertified. Should they get recertified, then yes. Otherwise, I just won't touch it. Uh, they got a long road to getting recertified, and even once they get recertified, so many orders have been dropped from them on the commercial side. It's going to be tough. They're in a struggling sector now. Their military contracts and government contracts should carry them through that, but they still need to get approval on that. Another big thing for Boeing was their space program, but Virgin and Tesla have beaten them to it, and now NASA is more closely aligned with Tesla than they were with Boeing. So, okay, so December cash on hand is down. Total assets 3 million. They've halved their total assets in a quarter. Quarter to quarter, half the total assets they had before. Total liabilities have significantly decreased as well. So where did the money go? What's this? Goodwill. There's a 4 million deficit in goodwill. What is goodwill? Revenues are half what they were the previous quarter. Operating expenses were about the same. Net loss, they're burning money. Quarter over quarter, they're burning money, so they're not earning. They started the year with $1 million. low cash in hand. I like space. This is LMFA. Um, I see MFA as an $8 stock in 12 months, with their 10% yield put back in. So for me, I guys, full disclosure, I will show you guys my portfolio. It doesn't, unfortunately, my trading desktop until 6 a.m. They do work on it every morning from 4 to 6. So unfortunately, I can't show you my holdings until then. But I'll show you guys my holdings. I like to be transparent about that. Here's what I'm already in. Here's my thought process. I love to show you guys that to show you that I am in the market. It is real dollars that I trade. I'm not a paper money trader. I am in the market daily. I do have that there. Um, okay, my holdings are okay. Here, I'll show you guys. Okay, so this is my Canadian margin account, my U.S. margin account. My short accounts don't have anything in them right now, and my this is my RDSP account. Okay, so what we're gonna see here is so this entire right now it's 3 accounts that's split over. These 3 accounts started with $3,000 at the start of the year. Okay, guys. So right now, you guys can see this number up here, hopefully. Right now in the Canadian account, um, we've got about 15 grand in there. With ACRX being the principal holding in the Canadian account, but there is MFA there as well. I do have a small holding in MFA. You can't see. Okay, so this account has a total book cost of 21 grand. So the entire thing started as a $3,000 thing. Um, there's no right or wrong move in the market. Nobody can ever tell you it was a right or wrong move. So yeah, you'll see my holdings here for ACRX, IPIX, MFA, and WPRT. That's the Canadian margin account. My US margin account, I'm holding OCGN, a very small piece of OCGN. DMPI, I've got a medium-sized holding. And then Waiter, I have a Waiter's probably the largest holding. Now with this, guys, again, all of these accounts started with $3,000 total across them. So right now, what we're looking at is 21,000 Canadian. There's about 6 grand US in that one, and then there's 2.5 grand Canadian in this one. So coming close to that 30 grand mark off of 30. So 10x the initial investment over this year already, which I'm pretty pleased with. The next couple days are going to be quite kind to me, I think. And as we head into Q3 earnings, there's several of these plays that I see doing phenomenally well in that time. So we'll see what happens. But right now, I'm pretty pleased with the direction. Now, everybody, when they see those holdings, goes, "Oh, that's a lot of red." Yeah, but trust me, when one of these goes off, it goes off in a really big way, and that unrealized P&L goes away in a big way. So ACRX would be the big one. ACRX is most likely going to be the big bankroll. This is the Canadian version of TD, so it's the TD Advanced Dashboard. Um, Paper money trading is when you go into something like if you go to if you go to something like tradingview.com, you can get an account. They're free. But go to their charts. And down at the bottom, you'll see something that says paper trading. And what you can do with paper trading is go, okay, well, I want to test out an idea or a theory or a strategy. So I'm going to buy a stock without having the money. What I'm going to do is I'm going to say, okay, well, I want to buy 900 shares of this at the ask. Now, this is going to tell me it can't do it because the markets are closed right now, but that's fine. The order's placed. So I didn't actually have any funds there, but what this is doing is allowing me to trade with a net balance account to test strategies out and figure out, is it going to work, is it not going to work out. What's your general trading strategy? My portfolio is typically a long equity portfolio in the bio sector. So typically what I am trading is biopharmaceutical companies on medical information on a 6 to 18 month scale. So ACRX is a biopharma. You'll see that it's 68% of my holdings in this portfolio. IPIX is also a biopharma. So my bio portfolio is about 70% of my Canadian portfolio. Now there are some other ones here. I do have this is a green energy diesel conversion China play. That's 11%. MFA, that's REITs. That's about a 17%. OCGN, DMPI, again, healthcare, 22%. Waiter they've got it under tech, but it could be consumer products as well. But that's 77% of the US margin portfolio. This is a play that I've played once already this year and milked. I see great potential for it moving forward. So that's kind of what I'm doing there. And then again, healthcare, 75% of this portfolio as well. So healthcare is heavily weighted in my portfolio. And again, it's on a 6 to 18 month timeline, which not a lot of people have the patience to do. You guys can't see anything of what I just circled because I didn't have the screen up. But yeah, heavily weighted into healthcare over a long-term basis. I don't play that day trade game where I'm in, I'm out, I'm in, I'm out, I'm in, I'm out. It's not this fast-moving thing. Instead, I take a position on the forecast I see happening over the next couple quarters, and trade off of that. Do I work in the biopharma industry? Absolutely not. No, no. I like to give people full disclosure on what I am and what I do. I am a digital marketing consultant by trade. So I work in the advertising marketing industry. I brought my knowledge of businesses and how they operate into the market. What I found was one of the sectors that people tend to avoid is the, oh, did I do that wrong? Socials. I can't remember what the freaking command is. Voila. That's who I am. So I work internationally with some pretty cool companies. I do public speaking on national stages. I'll be speaking at the South Africa Innovation Summit later this year, as well as Social Media Week Lima. I'll be speaking there. Hoping to go back to social media marketing world this year. We'll see what that looks like. I was there last year. Typically, you can see all of those tags up there. That's all the different conferences I spoke at last year. Um, but yeah, that's what I do for a living. Um, my market trading is building a portfolio and an income stream for my retirement. Um, all right, so let's break this down. Note 2 is the one that I wanted of why that $400 million. Note 2, goodwill and acquisition. Company invested cash by purchasing stock. Okay, so they cashed this out. No, I didn't go to college. So I dropped out of high school grade 11 and went straight into working. And then a few years back, somebody said, well, it might help you out if you went to college. So I tried Liberty Online for one semester and looked at what kind of education I was getting and the amount of money that they were requiring to continue that education. And most of the year one classes I could have taught on business or marketing or communications. I could have been teaching that class. So I opted that I would not continue that education through. Um, but the biggest thing the biggest thing for me was learning that post-secondary education is not worth the investment for me. No, I'm not completely opposed to post-secondary education. If you want to be a neurosurgeon, if you want to be a mechanical engineer, you want to be a lawyer, I highly recommend you go into post-secondary. But for people that are in business and communications, I don't see it. It's not there for me. The value isn't there for me. Um, Yeah, I mean it. Yeah, I'm not and again, guys, daily learning is something different than post-secondary education, right? So for me, I'm on the computer and I learn 14 hours a day, right? I'm up at 4:30 in the morning, learning everything I can about the market, what people are doing, about FDA approvals, the politics. Like I read through every single one of these stimulus packages that the government's pulled out. We're talking 1,800 pages of legalese that I would read through, and you educate yourself pretty quickly on that. Not a lot of people want to do that, but like I said, these reports here, these 10Qs and 10Ks, people don't want to read that stuff. I'm willing to do that reading, which is why, yeah, $1,000 portfolio gain, 1,000% portfolio gain in 6 months is nuts. It is, depending on the size of portfolio. I mean, if you take a portfolio from $100 to $1,000, people wouldn't really lose their mind on that. So, um, I guess that's 10 times. If you took it from $100 to 10 grand, I don't know if people would lose their mind on that, right? Or a dollar to $1,000. I don't know if people would lose their mind on that. What's important for me though isn't the percent return. It's I like to be I like to be as accurate as possible on my plays. I like to have a high win rate. And there's a lot of traders out there that give me crap on that of like, well, it's the dollar that matters, not the win rate. I really like having my win rate as close to 90% as possible. I like to have it 9 out of 10 that I get right. But that takes a lot of research and a lot of studying. So essentially, it looks like these guys had secured senior notes and they've cashed them out to stay relevant. I'm not seeing any news on LMFA, so this one's gonna get a steaming pile of pump and dump from me. I'm gonna, for me, I'm gonna keep it for the dividend. Um, no, my hope is that it pays out that 10% dividend again. Um, you do speculative FDA approval plays. You're gonna have to elaborate what you mean by what is a speculative FDA approval play. Okay, perfect. Um, there's remdesivir, there's Brlocidin. Interesting. This is JP Morgan that's looking at Brlocidin seriously. Okay, so I've got a scanner set up to pick up FDA approvals. So what I do is I would go in there and I would look at typically orphan drug designations. And so I'll pull up a couple of these. Um, all right. I won't do too many, that way we can actually break this down. Just going to clear off the rest of these here. Get rid of this. This, yes. This. Get rid of this. 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 Okay. All right. So with the FDA stuff, guys, orphan drug, it it can feel like a coin flip if you don't know what you're looking for. Okay. So I'll give you some criteria here. One of the big things that you want is this FDA calendar. Okay. That thing is going to be a huge help to you if you're going to play FDA at all in any way, shape, or form. Now, what this does is it breaks down what we see coming up on the FDA approval over the next little bit. So July 6th is the next big one here, PDUFA. So um, okay, so PDUFA, you'll understand that a PDUFA is just the right to commercially advertise for a product, right? So this means that the drug's already approved. It's likely that we see these two get a PDUFA approval because the drug already works. This is just them saying, okay, can we actively market it for sale? So and ENDP could be a play today on Xiaflex. Now, one of the nice things with Xiaflex is some of the requirements that I have for looking at bio companies on approval is have they had an approval before, or is this their first one? If it's their first one, it's less likely to go through. If they've done this before, the odds are greater. If it is a smaller company, typically I'll go in and look at who is currently on their executive, and if the executive has worked with other companies in the past that have a good relationship with the FDA, I would still be interested. The other thing you want to look for is these smaller companies often pair with a larger company in order to get the approval. So what we see here is BSTC and ENDP are both up for PDUFA. Okay, well, it's because it's for the same drug. So when a company that's worth $62 a share is paired with a $350 share, that probably means that ENDP initially owned this drug, and these guys are working with them to get the approval. It's very likely that this goes through, and I think that this would be a very clear signal to me that this is a good thing that's happening here. Now, as far as phase 3 stuff goes, phase 3 trial stopped due to compelling efficacy, so the drug doesn't work, essentially, is what that means. So when this was supposed to happen on the 2nd, it fell through. Anything that I'm looking at here as far as approvals, so phase 1 data due July 13th, I don't really play phase 1s. Phase 1s, it's too iffy. You don't know. You just don't know what's going to happen one way or the other with it. Phase 2, phase 3, it's a little bit different. The other thing that you can play are orphan drug designations, which is these guys here that I pulled up. So this drug here, accelerated assessment on their drug. You probably can't trade. Yeah, it's Daiichi Sankyo. Okay, Daiichi Sankyo is a major biopharma out of Japan. They often have somebody who's collaborating stateside, but for right now, yeah, it's already available in the US and Japan. They're looking to bring it into Europe. That's all that this is. But if you could trade this, if you were in the Asian markets and you could trade Daiichi Sankyo because of this accelerated improvement process, this would be something of note. This would be something I'd be interested in. Microcap daily. What's next for this post the reverse stock split? So NSPX had a reverse split. 1 for 30. NSPX is what it will be trading as. Okay, it's got 15 patents, 40 pending. Okay, so when I see something like this, I go, okay, great. I want to look up Inspire Therapeutics. This is showing potential. Go in here, go to their website. It's not really a great sign that they don't have a website, that they've just got an investment page. Yeah, not so. This would be a red flag for me. This would be a huge red flag. You don't got a website that I can see your pipeline on? Okay, about genspare.com apparently is what they are now. If there is no website, that's of no interest to me. So I'll move on. I'll let that try to load. It doesn't seem like it's going to. Without news about their pipeline, I would never look at a biopharmaceutical company. Okay, Corcept phase 3 trial. Okay, so Court starts phase 3 trial. Trial seeks to evaluate blah, 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 80 patients, blah, 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 pancreatic cancer. Okay, the results from our open label phase 1/2 at the ASCO. We believe sufficiently positive results would support accelerated approval. Okay, so that's of note. That they feel like this is something that's attainable is interesting. I would more so be looking for. I would wait until they get that designation. So this is of note. Anytime you see a pediatric approval, so rare, that's worthwhile. Okay, NASH is a particularly nasty development. I didn't see anything for orphan. Okay, orphan medicinal product designation in the EU for MIV 818. So this is an MVIR product. Pending. Okay. MVIR. Multivir. Yeah, it's not showing up on any of these, so it must be a European tradable only. So again, that would just immediately knock that off my charts. And essentially that's all I would do is I would go through it now. I'll show you one for um, innovation pharmaceuticals. I want their website. Innovation pharma. Okay, so what it would look like is, okay, well, we've got this designation. Great. Okay, well, here's a thing. What I would do is I go, okay, well, there's news about this drug. Yes. Yeah. An orphan drug designation means that the drug that the FDA is looking at is getting fast track approval, first of all. Um, the big buzz terms that you want to see are orphan, fast track, and pediatric. If you see any of those attached to a drug, you should take note. You should highlight those and say, okay, fast track means that they see huge potential in what's being developed to either improve currently available options to people, or it's something that's not something that's going to replace the first in class treatment. So it's going to be better than what's already available in the market. Orphan drug designation means that it's a drug that does something that no other drug does. It's an orphan. It's all by itself. There's nothing else with it, which is huge. Because when you look at some of the diseases that this looks to fight, an orphan drug designation could be massive, because it's an entire group of people that are not able to receive medical treatment that now can through um, through this drug. Pediatric means that the drug is safe enough to use on children as well, which is pediatric medication. While there may not be as many children as other people, it is quite expensive to be in pediatric medicine, because the money's not there. Um, and so when people create drugs for that, what you're seeing is drugs that need added testing, added approval just to treat this smaller group of the population that may have a rare drug or disease, which is what drives the cost up, right? Um, the demand may not be as high, but the supply is extremely low. So those are the ones that I definitely watch for. Now, when I find a drug of interest, so again, Berlacin here with the COVID, right? We go to their pipeline. And every company worth anything, okay, is going to have this in place. And what you're going to see is the drugs that it's working on. So right now, Innovation Pharmaceuticals is a smaller company. They've only got the two drugs that they're working on. What we've got here is Berlacidin. It's currently in phase 2 for this trial, headed into phase 3. Phase 2 headed into phase 3. This is typically the area that I play. Their Covetrin drug is headed into phase 2. Now, I'm not playing them on any of this. You'll see that there are little addendums here. These are worth reading. So addendum 1, Belastin was awarded fast track designation on this drug, or on this application of the drug. These are different diseases that this one drug could be used for. So it can be used for all of this stuff. 2-3 on this one. So this one's qualified for fast track and priority review. For 4, this is just defining what these are. And this one here is canceled or not quite accomplished. I think these two here are wiped out essentially. But they've got 3 fast track designations. And this one here is an orphan drug as well as a fast track. So you've got a fast track on this, a fast track on this, an ovarian cancer that has an orphan drug designation that's heading out of phase 2. And then on top of that, you've got a possible COVID play. So for me, this is how I break down a pipeline. I look at it and go, okay, where are we at? How many are in phase 2 headed into phase 3, or phase 3 looking for approval? Absolutely. No, I'd rather people know how to do this. And this is how you deflate the fear around bio, right? Where a lot of people they'll just trade the headlines. They'll look at the headline for the day and go, okay, well, what's happening in the headlines? Let's see here. I'm sure there's a bio stock in here somewhere. Yeah, here. Okay. Great. Cytodyne to sign a deal for COVID phase 3 trial for this. This isn't an approval. This is just them doing a trial. But Cytodyne will probably go up pre-market as a result of this. Oh, it's actually down as a result of this. But again, what I would do this instead of the headline is I would go to Cytodyne's website. Cytodyne. So I want Cytodyne.com. Okay. Go to the overview of their pipeline. So you'll see that they've got a few more drugs or treatments and where they are. So they have a HIV combo 1 therapy that's in phase 3. So it's already in phase 3. We've got a monotherapy that started their phase 3. Cancer, they've got a bunch of phase 2 stuff going on. COVID, they're in the midst of their phase 2 study on it. So like this is one of the COVID plays. You would come in and take a look at this and go, okay, well, what do I think about this? I wouldn't necessarily play this on COVID, but their HIV looks big to me. And I imagine they're actually using their HIV drug as their COVID drug. So they filed their need for a phase 3 trial on their HIV monotherapy. 3 and 4, their cancer drugs have fast track designation and orphan drug designation. Yeah, so this is another encouraging pipeline. I've never traded this before, but I would be interested in trading it for sure. It's showing a lot of the right things that I like to see. That this is already through phase 3 and it has a BLA filed. Another phase 3 trial starting, and then fast track and orphan drug designations on their cancer stuff. It looks good. This is a good looking company. No, no. I guess I can't say that. So the way that I trip across some of these are if there is. So there was news today on Twitter of bubonic plague. Okay, so what I do when news like this drops, right? Okay, bubonic plague. Head over here. Bubonic plague treatment. Crap articles like this. Antibiotics used for bubonic plague. Okay, so here are the antibiotics that you could be using for this. Streptomycin is the big one. So go find out who makes streptomycin. Okay, so Thermo Fisher Scientific, that's a tradable stock. Thermo Fisher, TMO. Okay, so here would be the play of okay, there's a bubonic plague outbreak. You need to have access to this drug. Streptomycin is the first in class treatment for the plague. If people take this, they don't die from the plague. So you should probably take this. If this is the company that's producing it, there's a high probability that this is the company that's going to go up as a result of this news. With that being said, if you can't play this on equity, obviously this is a little bit expensive. That's where an options play may come in. You could take a 366 or a 370 strike on this for 4 months out, because you know that that plague is going to spread a little bit, but it's also going to you're going to have the cure there handy from TMO, which is again, guys, this is one of the problems that people have with a lot of bio trading is they go, okay, well, so essentially what you do then is you went online, you found people that are dying from a disease, and then you find the company that's going to cure that disease and you buy that company. Doesn't that feel ethically wrong? And for me, it's actually the opposite of that. I like investing in bio because for me, take for example something bad that happens in the States. You've got something like the Black Lives Matter movement happening right now, and it's not that Black Lives Matter movement is a bad thing, but the things that are causing it are, right, the shootings, the killings, the all of that stuff, right? Now when bad things like that happen, traditionally what we see happen is gun sales go up and people buy into the gun stocks because people go out and buy guns. For me, I don't like that investment because what you're investing in is people's fear, right? You're investing in the fear that people have against whatever bad thing is happening. For me, when I'm looking at this, what I'm trying to invest in here is people's hope, the hope that a cure will come, that a treatment is there. I feel better about supporting the companies that are developing these cures and these treatments through my investments. So it's not that I'm looking to capitalize on people that have the bubonic plague. That's not what I'm doing. By investing in the company that develops the antibiotic that will treat the bubonic plague, that gives them an influx of cash. That influx of cash can be better used to get that treatment to those people, right? So especially a smaller company like IPIX with COVID, right? This is a pretty small company. But if you see money flowing into the company, now they've got more money to work with, they can move their trial along faster. And the faster the trial moves along, the better off that is for getting the treatment to the market as quick as you can. So for me, when I invest in bio, I'm not one of those guys out there that's like, oh, people are sick, I'm going to make money off of people. That's not the idea. The idea for me is when I invest in biopharmaceuticals, it's people that are out there developing treatments and cures for people that are suffering and hurting and dying in horrible ways, and these investments help these companies to speed up the process of what you're doing, right? The more profitable the company becomes, fantastic. Now, when news drops, when we get news, let's say today Trump comes out and he says Perlacidin's the thing, that's what we're going for, the government's going to give them billions of dollars to flow into this thing, great. Now that I know that they've secured funding or they've got approval and they can sell the drug, I will exit my position because they don't need my money anymore. Now, did I make a profit on that investment? Absolutely, I did. Absolutely. However, that initial influx of cash that I put in, however small, I was part of getting that stock to that point. So that's my ethical stance on bio trading. Okay, so here's a breakdown of ACRX that was sent my way. 5 analysts, all strong buy. This dude here. This guy is almost exclusively a bio trader. Okay, we got some news coming in now that it's 6 a.m. This is typically when we start to see the press releases. So I did develop a. I know most people took the Friday off. Um, Instead of me taking the Friday off just because the markets were closed, I decided to develop a new hypothetical strategy. It has to do with an earnings play. We are heading into earnings season, so I did want to have an earnings strategy built out. Essentially, what it worked when I build out a strategy like this, guys. What I do is I take a look at a single hypothesis. I say, I believe that this could be true. Hold on. Before I break this down, I'm losing my voice here. I need to go get a glass of water. 60 seconds. I'll be right back, guys. All right. So when I am putting together a new strategy, the way that it looks like is I start with a hypothesis. I think this, okay? And this is pretty common for anybody that's ever taken a science class, that's ever done any kind of marketing, advertising, business planning. You start out with a hypothesis. I think something. So for me, I thought there would be a consistent pattern 24 hours following earnings. So somebody comes out on earnings and they say either I beat or I missed. Most people try to play up to earnings or through earnings. I'm looking at what happens after earnings. And there's not a lot of people that talk about that, which means that there could potentially be a play there. Okay. So, what I did was I started with things that beat on earnings and things that missed on earnings to see if there was a trend in regards to how the stocks perform 24 hours after. So, these companies that I'm seeing here, these are ones that popped up um, on Thursday. Um, we got news that they beat. Um, yeah, so this is a prime example. So we got news that this beat. Um, so the stock would have done what it was going to do. So I'm going to take a look at KFY here. Okay. So KFY was 30.17 at close. So we're going to go duplicate demo of beats 11.5. I guess I don't need to do a demo of it because I've already got it built into the other sheet here. So let's just go down here, 07, 06, 2020, KFY, 3017. Okay, so the way that this works is I went, okay,
if it beats on earnings and revenue, EPS and revenue, what does it do the next day? So if you bought it on the close of that day and then sold it immediately on the open of the following day, what would the result be? This is a breakdown of that. I also did what happened if they missed and what happened on the following day. Now you'll see that all of the ones that I still have here are beats, 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 right? That's because the ones that missed did not have a consistent pattern. So the only thing that showed me a consistent pattern that was playable was beats. Now, when you look at the original one, this is without any cap, without any restrictions, just go at it, right? Every stock anywhere, all of them are possible. So you see stocks that are worth up to $200 all the way down to $1.45 on this. All kinds of different sectors all over the place. I didn't do deep dives into their 10Qs, their 10Ks. I didn't look at their financials. I don't know what their businesses are. Some of these I recognize, but other than that, the only criteria is that they had earnings and they either beat on both or they missed on both. That's it. That's the strategy. Okay. Now, a 58% win rate is nothing massive. It just isn't. Okay. But what this showed me is close to 60% win rate with no managing criteria around it. There is a huge possibility to refine this to see if you could get better results, which is what we see down here. So these beats 65.5, beats 25, beats 11.5. These are restrictions that I'm putting on the prices of stocks. And what we'll see is, okay, well, I accumulated this data and then I went to 65.5. Okay. And 65.5, what I did was limit it to nothing over $65, nothing under $5. Okay. And I wanted to see what that did to the win rate. And what we saw was, okay, bam, 62.5 on the win rate percentage, right? So we put in some more numbers. We broke this down. I found some more stocks that were in here. And as a result, what we got to see was, okay, well, here is potentially better gains. Now, for me, that's still not a high enough number that I'd be interested in actually putting this in real time. So I went, okay, well, what if we make it a little bit tighter? Okay, when you go to 25, so nothing over 20, nothing under 5, the win rate goes to about 67%. Okay, now we're getting closer. This is getting realistic. The other strategies that I use, my long equity is closer to 90%, but the short strategy that Martini and I have been developing is around the 74% win rate. So we're getting closer. Beats 11. So here is the one that we put the most work into. This is an 11.5, so nothing over 11, nothing under 5. And this is how the play out works. It's 71% win rate. So we've gone from an initial win rate of 58% to a 71% win rate on the strategy. And this is all looking back at past performance, right? So this isn't using this to forecast. These will be the first ones that we start to gather data. Typically, I would like to see 50 to 100 points of data in there, but we'll see what this week brings. I'm going to try to put in a few of these headed into this week, and we'll see how they perform and see what that does to the calculations on this. But I mean, if we look at KFY pre-market, hasn't done anything yet, but we'll see how it goes here. So what's another one here? So TC, Fizz, and Calv. No, TC and Fizz. TC, Fizz. TC close was $1.45. Fizz close was 63.93. So I'll just continue to develop this out over the week, guys. See what kind of performance that we get off of it. See if that's a continuing thing, but this could be a potential play headed into it. Now, obviously, what you see here is a breakdown of a whole bunch of different things, but essentially the way that this works is I've got two different methods of weighting this. One is simply buying 1,000 shares and what the percent gain is on that. And then weighted shares is using a bankroll of 10K. How many shares can you get for 10K on that, right? Um, it says how many shares of this would you be able to get at 10K, and then what's the weighted profit on that based off of the play. So you'll see that this all will automatically populate. Let's say this goes up to $70 here. You'll see that, okay, well, you would have made $900 on an investment on this strategy with that. Same thing with this one here. Let's say it goes up to $2. You would have made close to $4,000 on it. So yeah. So I mean, we'll break this down this morning and see how it goes. Right now, KFY isn't doing anything pre-market. Fizz slightly down pre-market, so we'll see how that goes. And then TC is slightly down. Well, this is post-market. This isn't even pre-market. So we'll see. We'll see what these guys do first thing this morning when we open up. But essentially, that's what I spent my Friday doing. Just because the market's down doesn't mean it wasn't a work day. Developed a whole new strategy. I highly recommend, guys, when you do get an off day like that. I know a lot of people want to rush out for the weekend, but I would recommend that you perhaps don't do that. Okay, let's check out what the US have to say. We'll go into Bloomberg. Hong Kong's back into a bull market. So Buffett likes natural gas, even though Dominion Gas does not. So this is of note, guys. When Buffett buys something, okay, so Berkshire is picking this thing up. Berkshire's acquiring more than 7,700 miles
natural gas storage and transmission pipelines, 900 billion cubic feet of gas storage in the deal with Dominion. Dominion gas. So this would definitely be more of an options play than an equity play. Waiters taking off pre-market. What's so weird? Yikes. What is so weird, man? Cajun Auto gets non-compliance notice. Offer shares to cancel debt. New CFO filings. Beijing, China. Used car dealership. This is a China hustle stock. No, I'm not a skinny nerd. That's true. I am a nerd. I definitely got the nerd thing going on, but yeah. Yeah, no, I'm not a tiny little guy. I've got my COVID-15 tacked on too. So I mean I'm probably floating close to that 230 mark right now. I can't wait for the gyms to reopen here so I can get back at it, but I'm calling this an extended bulk period for all intensive purposes. Remember the movie Twins with Arnold Schwarzenegger? He's the smart one. He's not. Okay. What else do we have in our notifications? Okay, so Buffett deal is big. Britain's car industry. Wouldn't really want to play that. Yeah, this is a big deal. They closed their entire stock exchange. Yeah, they shut down the entire exchange. People can't get their money out. Since 2000, when the government began encouraging the violent takeover of white-owned commercial farms, investors have faced the sudden seizure of assets and bouts of hyperinflation. So what's interesting is he's saying, "Don't worry, the market will reopen." What do you think that anybody of any note or intelligence is going to do when this market reopens? Is there a Zimbabwe ETF? Yeah, exactly. They're gonna everybody, everybody wants out. Let me out. Zimbabwe ETF. Okay, AFK. Okay, so apparently AFK is the ETF. It's not really heavily weighted into Zimbabwe, but I can't see this being good for that sector. Leading to inflation of 500 billion% in 2008. And that's crazy.
Yeah, this is never what an investor wants to hear. A government that says we own it and we can take it. Like, no, no bueno. Here's a global ruralization theory coming into play again, guys. One of Japan's largest employers plans to cut office space, not stop, but office space. They just want people to work from home. Saudis raise prices on all their oil. China surges. No deal Brexit looming. People are exiting London. SoftBank is taking another hit. Postmates we knew about. Australia's biggest pension fund managed to come up positive. That's huge. Tesla shorts for sale. Elon firing shots. Love it. Trump's worst nightmare may be happening. Uh, Everybody's starting to look at this second wave. This second wave is going to be a thing, and it's like, well, yeah, of course it's going to be a thing. The really frightening thing with the second wave, guys, is if we don't have a vaccine for COVID, we're going to go through another bout of COVID, and that's true. But all of the companies that would have traditionally been developing the flu vaccine, doing the studies, taking the time to make sure that we had a prep flu vaccine ready to go, what do you think that they have been doing actively throughout this entire period? Do you think that they've been focusing real deep on creating a effective flu vaccination for the upcoming season? Nope. Mm-mm. Not nearly as much money in the flu vaccine as there is in the COVID vaccine. And so what we're going to end up with is us heading into uh, COVID bout two, but we're going to have a massive amount of uh, massive amount of issues with flu, just the seasonal flu that's coming around. You've got people that are trapped into tight spaces. You've got seniors not able to leave their home. The retirement villages. You've got hospitals that are overwhelmed. You've got and all these places, guys. You're gonna have bacterial pneumonia. You're gonna have influenza. You're gonna have all kinds of these seasonal illnesses that are popping up that we aren't prepped to deal with, and that's going to create an additional burden on the healthcare system that's already, I mean, let's be honest, racked here. I'm not a fan, man. I'm not a fan of NKLA at all. Um, I really their financials are sketchy. They don't have the infrastructure. I don't like their pipeline. There's nothing that I like about NKLA. If I had to pick one that was similar to NKLA that I do like, it would be Shell, um, SHLL. This is one that I would be more interested in this space because not only are they down the road looking to develop a truck, but they are already doing powertrain conversion, which is huge. So I like Shell better than NKLA. I wouldn't be surprised if Shell overtakes NKLA by the end of the year, um, simply because they already have a product on the market. I would like to never go back to the office. That's a reality. Oh, Segway is losing a personal transporter. Shocker. That thing didn't really take off at all, did it? I have no idea who this band is, but apparently it's a big thing. Yeah, so the Badger's a bit of a meme. It's a bit of a meme. So they've got a lot of mock-ups here, but actual production, not so much. SEC filings. When they do their first quarterly earnings, I think that's going to be a huge wake up call for a lot of people that are in NKLA. Let's see when their first earnings. NKLA earnings. What's up, Yura? Okay, so they're estimating August. Yeah, I mean, what can I tell you other than this is not going to go well? Um, EPS estimate is down 14. There is no revenue estimate. And when we look at NKLA as far as projections go, what do the analysts have to say on this thing? Low 45, high of 79. Only two people on it. I'd like to put a 12-month sell on this at 20. It's been pretty good, man. Pretty good so far. The markets are looking green. I'm pretty stoked about this announcement right here. I think this is going to be huge today. Next week, administration officials plan to promote a new study they say shows promising results on therapeutics. They wouldn't describe the study in any further detail because they said its disclosure would be market moving. So I'm really hoping that this comes out, and this is Burlacidin. I'm hoping that this is IPIX today. Hopefully they come out with that announcement today once the markets are open. But I'm anxiously awaiting. That's a very generous target. I mean, I look nutty compared to the other analysts on this thing, but I cannot in good consciousness, given what I've read, see any profit in NKLA for the next 4 years. And a company like that has no profit for the next 4 years. Most will already have existing patents. So take Burlacidin, for example. Burlacidin is already a patented drug under Innovation Pharmaceuticals. So it's not developing a new drug, it's using an existing drug and applying it to COVID. So yes, they will own the patent on it for that designation. As far as a new drug developed under government money, so Pfizer, for example, is just looking to create a drug right now. I think Pfizer actually may have an issue getting a patent because the government may just patent the drug and give Pfizer a kickback on it. But that's yet to be seen. India just surpassed Russia. This is a plastic-free visor made from wood pulp. Yeah. Yeah, I think it's gonna be a super green day. Che Guevara, really? You're replacing. I'll give you the colonial thing. I'm there with you. I am. But when you're this dude here, this is not a hero of the people. This guy here is not. Uh, This is not a hero of the people, folks. No, 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 no. So that's not the way this works. So typically the way it works is it starts in the US with the US economy, and then it translates over to the Asian markets, and then the Asian markets into the European markets, and then we start the cycle all over. People are looking to the US right now for what is happening. So over the long weekend, when we ended on Thursday, and then news came out over the weekend of what Trump is looking to do as far as extending the PPP, as far as possible new vaccines or treatments for COVID. All of this is good news. It's kind of piling in. Kanye West is going to be the next president of the United States. All of this good news ran over to China. China went, "This is great. We love it. Chinese markets are first to open. Bam, let's get down to it." And they were green. When the Chinese markets are green, the European market goes, "Okay, so the US market is looking positive sentiment because China is looking positive. We're going to be positive as well. Let's buy in." And then when it gets back to the US, we don't really care in the US markets what the Asian or the European markets do. There are definitely historical things that can make you money, but this is not one of them. Yikes. So that guy gets to go to jail for life under this new law. Calling China on COVID. Yikes. This is showing that China knew about COVID in 2013. Yikes. It's interesting though because when you're up here and you see Trump saying that China's secrecy, deceptions, and cover up are the cause of this, and then you move down a few and you're like, "Oh, Trump, you're being so crazy." You move down like two more articles and that's there. So Nathan Law was one of the faces of the Hong Kong protests. He's left Hong Kong. He's not disclosing where he's going. I would imagine Taiwan or the UK. So this is going to happen. This is going to happen in the States too. People think that this isn't going to happen. Just because we get a vaccine, it does not mean that people are going to line up and just take it. This medicine has been rushed through like nothing. Um, this is not a anti-vaxxer versus vaxxer argument. This is a even if they come up with a vaccine, do you honestly think that people are just going to go and run and take this thing after all of the shortcuts that they put through on this? Even people that typically get vaccines are probably like, maybe I'll be phase two. You know, I'll let phase one get vaccinated and see how that goes, and then I'll look at lining up after that, right? Like this is gonna be a thing. And there goes Christopher Columbus in Baltimore. I don't know anybody that's like, yeah, sign me up, first in line. Okay, FEC data shows the musician hasn't filed the necessary paperwork yet. Luckin Coffee CEO is booted. Is it worth going to university? Get ready for the ugliest earnings season ever. I think there's gonna be a massive knee-jerk reaction, and what we're gonna see is, I think we see SPY go 330, at least 330, and then we see it come back down to 320, and then we actually go, okay, well, is this actually gonna do anything, or does it actually stop anything? Well, what are we looking at? And then we go from there. I absolutely agree with this. This is going to be bloody. All 11 sectors are projected to report a year-over-year decline in earnings. I would wonder about that. I wonder if consumer staples doesn't buck that trend. I'm wondering if consumer staples doesn't survive this. 11 love it when scam articles don't get it right. Yeah, that's what I mean. I think there's going to be an initial knee jerk that drives it up, and then, yeah, we see a correction back down. How far down that goes, I think we see go up 330, back down to 320, and then where it goes from there, people will hold their breath and we'll wait and see. I don't see SPY falling below 300 though. What do you think the market will want to see? What quarter? A lot of people are talking Q1, Q2, 2021. For me, I'm expecting to see Q4 to be fairly profitable. But again, guys, this is exactly it. When people talk about the market's a big freaking beast, right? So when people say the market, it's like, well, okay, like what you gonna do? Are you actually going to trade the entire market? For those of you that are either trading the SPY isn't even the entire market, right? SPY is simply an ETF that tries to represent the holdings of the S&P 500. The S&P 500 isn't even the whole market, right? Doesn't take into account any of the micro cap or small cap stocks out there, which is where a lot of the movement is happening right now with retail trading. So the market is too damn big. What I highly recommend you do, there is profit to be made every single quarter. Okay, so people are, and I'm talking long or short. You don't have to bet against the market right now, right? SPY is, I mean, so the there's money to be made long and short in upcoming earnings. Now, are we going to see things like Ford and GM have a brutal quarter? Yes, we know that. We know that's going to be a fact. Things like Peloton, are we going to see Peloton have a brutal quarter? Absolutely. Things like Nikola, are we going to see that have a brutal quarter? Absolutely, we know that. But are companies like Costco, Walmart, Target, GameStop, Waiter, Uber, well, Uber's going to have a bad quarter, but Waiter's not going to have a bad quarter. Waiter's going to have a phenomenal quarter because Waiter already beat their entire profitable Q1 just in April. Just in April. Since then, they've picked up additional states. They've grown their service area. They have more drivers than they've ever had. Hold on. Hopefully, I still have it up here. That's not it. Did I close it? This is just so many. It's not that one either. Oh, yeah. Okay, here we go. Here's the article. Yeah, I think Peloton's gonna have bad earnings. I do. You're looking at me. Yeah, so they drop on a yeah. You think they drop on a beat? I don't think Waiter drops on a beat. I think Waiter goes through the roof on their beat. I think it's gonna be really, really nutty. So with Uber Eats owning Postmates, guys, what we're seeing now is everything on the right side of this, the red and the green, those merge together. So New York, LA, this is Uber Eats trying to get on par with Grubhub. But what's interesting as far as this goes is Waiter is picking up market share from all of these guys. 31% of people that use DoorDash. Oh, yeah, I don't know that they beat on earnings because they had yeah I guess the only upside could be is if people can't get to the gym and they really want to work out during this time, they bought a Peloton. That would be the only play on it. But I don't think they beat on earnings, and I think that they drop. With Waiter, guys, I'm super excited for Waiter. Like everybody, so what this is showing here, this chart is Grubhub users. Do they also use other platforms? So Grubhub, which is the big beast, 13% of Grubhub users also use Waiter. DoorDash, 31%. Uber Eats, 12%. Postmates, 5%. But the people that use Waiter almost exclusively use Waiter. Lucas, was it worth it, man? Was the Peloton worth it? Does it really change the game that much that it was worth it? Bunch of news coming in here. All right, so remdesivir okayed in India. Unfortunately, they won't be able to get anything. Ooh, China's doing a knockoff. So MYL has licensed Gilead's drug and is going to be the one selling it in India, guys. There is a huge bio play right there. That is a huge bio play. So India is now the third highest in the world. So we've got US, Brazil, India. Yeah, I mean, we'll see on Peloton. So India is one of the largest, and it's ballooning. And now that the U.S. has bought all of the remdesivir from Gilead, Mylan is going to be the one that will launch its version called Desram in India. This is huge for Mylan. That's massive news, guys. Absolutely massive news. Okay, so LMFA, guys, we looked at earlier. It's a dog crap company that buys up condo debts and then makes the people that owe the debt, they take them to court, and they make them um, they make them pay the company's legal fees as well as the debt. So the company goes up to these people that own massive condos and people aren't paying their debts, and they say, "We'll buy your debt. Here's cash. You guys take the cash. We own the debt." Then they take those people to court, and the people that are then taken to court no longer not only own the debt. India's like 1 billion people. I think it's more than that. India population 2020. Yeah, 1.4. 1.4 billion. Yeah. But yeah, LMFA guys, they're bleeding money left, right, and center. And now that more and more residential platforms are coming out of forbearance, I really like this is not a profitable company. That it's up this much is an overreach for sure. Um, Radio One, Broadway, Financial, these are BLM plays that have happened before. This is retail traders pumping up a low float stock. Um, Blink is a real company. They're up again. Carver's up again. These are all repeating names that we're seeing on these top gainers pre-market here, guys, with the exception of LMFA. Yeah, I mean, Boeing will be interesting to watch on their next stage of approval. I don't. The thing with Boeing at this point is even if they can't get their approval, um, even if they can get their approval, I should say, their earnings is a nightmare. The number of sales that have dropped as a result of it. This is huge. Like Norwegian Air, 97 planes. That's not cheap, right? Like that's it lost the space war to Tesla. Like there's doesn't mean anything to me other than that post-secondary education needs to evolve if it wants to survive. $800 planes currently grounded. About half of those are Boeing's because they were never delivered to customers. How's our boy Tesla doing this morning? Those Tesla short shorts are sweet. 1,200 on Tesla. The man is a legend. The man is an absolute legend. Okay, guys. For $69, you too can own your own pair of Tesla short shorts. How awesome is this? Celebrate summer with Tesla short shorts. Run like the wind or entertain like Liberace with a red satin and gold trim design. Relax poolside, lounge outdoors. Tesla logo in the front with a sexy across the back. Enjoy exceptional comfort from the closing bell. Come on. Dude is the biggest memer in the world. Oh, you shorts are still railing against me? You're still railing against me. Almost 1300 pre-market. He's gonna break 1300 pre-market. This is nuts. How's Shopify doing? Shopify's headed back to 1100. Like this is just nutty. You want to know the correction that I think is coming, Yura? These stocks right here. Shopify at $700-800. I think fair value. 1100? No way. No freaking way. No. I'm open to hearing arguments to the contrary, but I have yet to hear one that shows me that the fair value on that is accurate. Well, yeah, that's exactly it. The red shorts is the joke of it. Okay, so there's no news on this. There was no SEC filing as the first thing this morning on LMFA. So what in the world is driving this thing? $625 was its last filing. A loan repayment. This is June. So its cash on hand is now 6.2 million. Like, so this is called a straw man, guys. When you put out something like, I just pulled through their 10Q, I did a complete breakdown of what the stock is, why this thing is a nightmare. Here's a link to the 10Q, and their response is, I think you're burning cash on your trades. This is not this is a straw man. This is, oh, well, we're discussing their 10Q performance. We're discussing their quarterly earnings performance. And all of a sudden he's like, yeah, well, your trades are garbage. Okay, well, guys, those arguments are completely disconnected. There's nothing there. Literally, what is it in the 10Q that you like about this company? So the problem with Amazon is Amazon's like a giant market, right? It owns the market, and you put your stand up inside that giant market, and you have to pay Amazon to be in there. What Shopify does is it goes, we're going to sell you guys stands, and you can make them your own. And so it just sells people stands and charges them a monthly fee for them. I like that policy a lot more with Shopify because it allows people to retain independence and autonomy. So if you use Shopify's system for your business, you still control your business. You control who you ship to, how you ship, what your pricing is. All of that's there. But with Amazon, Amazon's got a lot of rules and restrictions about how you sell, what you can sell, how much you can sell it for, where you can sell it to. It's just more restrictive as a system. So one is about allowing the small business to retain its autonomy. Amazon is about bringing everything under the Amazon label. Hopefully that makes sense. All right, guys, it is 7 o'clock, though. I am done. Morning analysis is from 4:30 a.m. to 7 a.m. Eastern Standard Time every single day. If you missed the start of this, don't worry. I run a rerun as soon as I finish here. As well, guys, if you go to that YouTube channel that we were talking about earlier, I'll drop the link again here. You guys can see all the previous stuff that we do here. All right. Have an amazing day, guys. Thank you so much for all of you guys that are following, subscribing. It's a huge deal. I do appreciate that, guys. It's going to be an amazing day. Stay green out there.